The rand trading at around 7.12 to the US dollar. We spoke a little earlier, and it seems that some investors are heading out of the bond market, and this naturally softening the rand in today's session. Tell us what it looks like right now. Do you think we're starting to see a little bit of cautiousness ahead of the ANC meeting?
I definitely think so. There's been a lot of talk about nationalisation, suffix controls, Tobin taxes. So I think people are taking a bit of money out. The bonds have performed very well. They're taking some money out of those bonds. For continued flow into the bonds, you need sound monetary policy, and people are just showing a bit of caution into next week's meeting.
Well, just taking a look at the JSE All Share, we are in positive territory today. In fact, we're seeing gains all round coming through in Asia, feeding through into Europe as well, and US futures pointing to a positive start, pretty much supported by the likes of the copper price, which has started to rebound over the last couple of sessions, and gold, of course, hitting new all-time highs, $1,282 an ounce a little earlier. We're now currently at that $1,280 an ounce.
Yes, all-time high today on gold, and it looks like it's going to test that $1,300 level. The confusion in where the markets are going and if we're going to have a double-dip recovery continues to lead flow into gold and into inflation hedge on the one side, and just as a caution to world markets. And people want to have a physical store of value rather than just keeping money on the sidelines. So gold looking very strong, and it looks like it's going to stay like that for the rest of the year.
Well, it's interesting to note when you see what's happening to the dollar. We have been seeing money being taken off the table. Apart from that, the Chinese government has allowed its currency to appreciate. And then on the other end, in Japan, we've been seeing intervention to as much as 1.9 trillion yen coming into the market on Wednesday. What do you make of the sentiment surrounding paper currency as opposed to hard currency? It's pretty much evident in the moves on the yellow metal.
Yes, absolutely. I think one of the things you have to look at is that countries now need to get exports and need to get these exports going to get their economies going. And to get their exports going, they need a weaker currency. So everybody's rushing to try weaken their currency, and they're trying to get China to strengthen their currency. They can get very good imports. China imports very aggressively. So you've seen a world shift into the forex markets and trying to get their currencies to be slightly weaker. For South Africa, it does leave us. We've still got a very good interest rate carry at the moment, so we can decrease our interest rates by quite a bit to try weaken that rand. But everything is moving into the forex markets, and the battle of forex is now taking over.
Rob, looking at the fact that we saw futures close out in South Africa yesterday, we've got quadruple witching in the US today, which is when index futures, index options, equity options and security futures all expire. But in the US, they're pretty much echoing what we saw in South Africa yesterday, relatively light volumes. Why do you think we've been seeing so many investors sitting on the sidelines?
I think on the gearing side, when you come to triple witching, it's all the single stock futures, there's CFDs, all of the options, it's all geared products. I think a lot of people have moved away from gearing. A lot of it is just in the pure equity markets, into the bond market. So I think on the futures closeout side, it's definitely much smaller than it has been in the past. And people are still keeping a lot of money on the side, even though interest rates are very low overseas. People are trying to get a feel about the double dip recovery until they get clear indications, and really the one people are looking for is unemployment to come down. Once unemployment starts to move down, we'll start to see good flows coming back into the markets.
Well, just touching on those jobless claims, which fell unexpectedly to 450,000, the lowest level in 2 months. What is your view on that? Do you think that we're starting to see a little bit of a recovery, or do you think we're going to be oscillating on these lines where perhaps we'll be seeing a little bit of volatility when it comes to the initial jobless claims numbers and the unemployment scenario in the US?
Yes, well, I think 450,000 was a good number. Historically, you have to be under 400,000. You never get to a point where it's at zero. It's normally at an average of around 200,000 jobless claims, and you need to be below 400,000 for the economy to actually start to grow and to create jobs. So it's still 50,000 to go, and I think that's the number you're looking for. Once jobless claims go below 400,000, then the recovery will start. And I think in between that, there will be quite sharp jumps in volatility around all markets, and especially in the equity, in the employment market.
Today we've been seeing strong moves for most of the resource companies, obviously having to do with the fact that commodity prices are much higher, but it seems that we've been seeing no real conviction for a strong move to the upside. When do you think that is going to happen, Rob? What is it going to take? Is it about the rand, or do you think it's about general sentiments on a global level?
I think it's general sentiment on a global level. We're starting to reach the peaks in the resistance levels. On the S&P, it's 1,130, and on our market, it's 26,000. And as we get to the top of that range, the momentum starts to move off. People make quite good returns from the bottom of the range, and the South African market at 23,000. They buy up and they're selling out around the 26,000 level. So they are making returns there. And I think we need unemployment again to move down to break out of that resistance. So if we want to see the S&P break 1130, the South African market break 26,000, we need growth figures to start to improve and unemployment to come down.
Stephen Kossov, the Investec CEO, earlier this week was talking about a stop-start scenario when it came to the recovery, especially alluding to what we've been seeing in the UK. Looking at the banking environment as a whole, Rob, what is your view? Do you think it's a good time to enter these companies, perhaps try and catch them on the upward momentum, or are you relatively cautious?
I think on the bank side in South Africa, they're very fully priced at the moment. And to get a kicker out and to get improved growth out of these companies, they need to be able to grow into Africa. So I think you have to look at banks that have got a growth potential into Africa as your first point to start investing. But I think they're fully priced at the moment, and you need again, you need the employment and the economies to start to move. I think that all the banks currently are fully priced.
Rob, just taking a look at the rand, we were talking about it being at around 7.12 to the US dollar. We're talking about perhaps some political issues that might come to the fore, policy changes, a lot of concerns about nationalization. What is your peg for the rand next week? Do you think we could weaken from these levels? And of course, just looking at how seriously investors are going to be taking the political scenario in South Africa, do you think that most of it has been priced in?
I think there is definitely risk on the rand if the general meeting next week starts to lead towards nationalisation and a change in some monetary policy. I think if that leads to very big discussions on that, some money will come out of the bonds and the rand will weaken. If it's pushed aside and the ANC says that there won't be policy changes going forward in nationalisation, I can see a strong rand until the end of the year.
Rob, thank you very much for your time today.